Let's recap everything and compare everything side by side so you can kind of see the pros and cons of trading as a whole. So remember our rule number one, right? If we can win more than we can lose, our POP is always less than 50%, and that's the buying option scenario. If we can lose more money than we can win, our POP is always greater than 50%, and that's much preferred. So as an option buyer, because this undefined profit is much greater than that defined loss, we always have a low POP here, way down at 35%, which we don't like. And buying options outright is kind of expensive. If we go into the vertical game, as a vertical buyer, we're defining our profit. And by defining our profit, we end up with a POP much closer to 50%. So we take out this undefined profit, replace it with a defined profit, and we boost our POP all the way from about 35 on average to closer to 50 every time. Much better, and it's a much less expensive trade as well. Vertical sellers, even better. Again, we're defining our loss when we sell a vertical, and we end up with POPs right around the 60% POP range when we do them correctly. And finally, when we just sell options naked is our biggest POP because we have this undefined loss. Of course, we don't want to do that as beginning traders, but because of undefined loss potential, we always have a really high POP. On average, if we do it correctly, we're looking at about a 75% POP. But for us, we are in the vertical game. We're looking in the 50 to 60 POP range because we have a defined loss, also defined profit, but also a relatively high POP in the grand scheme of things.